this week Google announced its second quarter results and shares got taken down 7% after the announcement. It looked like a really decent set of numbers to me. Second quarter revenue in total was up 24% compared to the second quarter last year. Search revenue was up 17%, cloud revenue up 82%, and operating profit up 30%. So why did people hit the sell button? Well, I think they were freaked out by two numbers. The first one was their 2026 CapEx guidance. That's now been upped to between $195 and $205 billion for the year. The other number that seemed to bug people was this free cash flow number. So you collect all your money off your customers, you pay your day-to-day bills, and then whatever's left over, you can use it to invest in the business. Now, Google did that this quarter, and they used up all that money plus an extra $6 billion. So that's that minus $6 billion there. And that was the first time in the company's history that they've had negative free cash flow. But I don't think it's anything to worry about. This is a company with hundreds of billions of dollars worth of investments in equities and cash on their balance sheet. So it's not a question of whether they can afford it. I think it's more a question of, is this investment going to pay off one day? My best analogy for Google at the moment would be, think of them like a hotel business. Every hotel they own is completely full with customers. They're charging absolute top dollar to every one of them. And all of those profits at the moment are being spent on building another 20 hotels. And that's the tension you see in Google's accounts. They're building. You can see that here through the asset turnover. That's how many dollars of sales they get out of their assets. It's been on the decline as the AI race has heated up and they've had to spend more. But on the other hand, look at their profit margin. Up it goes from 21% in 2022 up to over 28% in their 2025 accounts. So they're spending more, but so far the profits are coming in. Now, if you're a bull on this stock, you'll be looking at Google and admiring the fact that it has 3 different layers in the AI stack. And hopefully they'll dominate 2 or maybe even 3 of them. It has its infrastructure, the chips, the data centers, the Google Cloud business. It also has the ability to create AI models like Gemini through its Google DeepMind business. And it also is embedded in people's everyday lives, apps that people use, search, YouTube, Google Workspace, Android. So they're in a pretty good space in this AI race. But if you're a bear, you might be thinking, well, computer infrastructure will become like electricity. There'll be data centers everywhere. It won't cost much. It'll be just another commodity. You might be a bit worried about the Chinese continually pumping out quality AI models for free. And Google might not be able to charge for the use of their Gemini model. And maybe you're a little bit worried about the amount of spending that Google has to do to protect its most valuable asset, which is its search business. So a lot to think about if you are an investor, and there's nothing in these numbers to suggest that Google isn't making a really good fist of this AI war so far. So they're performing well, but I think the bigger question is, when, as investors, do we start to see returns?